The true cost of home ownership. Today, we're breaking down something every first time buyer needs to understand from the very start: the true cost of owning a home. Most people think buying a house comes down to one number, your mortgage payment. But the truth is, that's just one piece. There are hidden costs, yearly expenses, and maintenance responsibilities that surprise a lot of buyers. When you understand these costs up front, you make smarter decisions, stay financially comfortable, and avoid the stress that comes from unexpected bills. Our goal is to help you see the full financial picture of home ownership so you can budget confidently and choose a home that fits your long-term lifestyle, not just your current paycheck. Here's the big insight. Most first-time buyers underestimate the total cost of owning a home. It's not because they're simply careless. It's because no one teaches this stuff. Understanding PITI, which is principal, interest, taxes, and insurance, is step one. But homeowners also face repair costs, maintenance, utilities, HOA fees, capital expenses, and other surprise expenses. If you don't plan for those, you can end up financially stressed or even regret your purchase. A good rule of thumb: expect to spend about 1 to 2% of your home's value on repairs and maintenance each year. For a $250,000 home, that's $2,500 to $5,000 annually. When you know these numbers up front, you prevent post-purchase regret, which is extremely common among first-time buyers who didn't plan ahead. Let's start with PITI, your core monthly housing costs. P is for principal. This is the portion that pays down the actual loan amount. I is for interest. This is what you pay the bank to borrow money. In the early years of your mortgage, most of your payment is interest. Taxes is the T. Property taxes vary by county and by home. In many areas, taxes can increase over time, especially if your area is growing or values rise. I is for insurance. This includes homeowners insurance and sometimes private mortgage insurance, which is PMI, if you make a small down payment. So in the real world example, on a $250,000 home with 5% down, your mortgage payment might look like $1,450, but your PITI might be closer to $1,850 after taxes and insurance. This is why it's so important to understand the full picture, not just what the mortgage calculator shows. Beyond PITI, let's look at the common expenses that don't show up in typical online calculators, like utilities, electric, water, gas, sewer, trash, recycling, and sometimes stormwater fees. If you're moving from an apartment, prepare for higher bills because the more space means more energy. Internet and cable. Many neighborhoods only have one or two providers, so prices can vary widely. HOA or condo fees. These cover community amenities, exterior maintenance, landscaping, and sometimes water or trash, but they can increase over time, so you have to plan for future adjustments. Lawn care and snow removal. Either your time or your money. Lawn equipment alone can be a few $100s. Those aren't hidden because someone is trying to trick you. They're hidden because homeownership has so many other moving parts that new buyers often don't know what to expect. Now, the two big cost categories: maintenance and repairs. This is a huge area where buyers underestimate expenses. Routine maintenance can include your heating and air conditioning servicing, gutter cleaning, pest control, water softener salt, landscaping, filter replacements, and these are smaller, reoccurring costs but add up over a year. unexpected repairs, this is where things can get pricing, like roof replacement, your heating and air conditioning failure, water heater replacement, foundation cracks, major plumbing issues. Remember the rule: budget 1 to 2% of your home value every year for repairs and maintenance. So, for example, if you own a $300,000 home and spend $3,000 this year, you're right on track. Next year, you might spend zero, or you might spend $9,000 if your HVAC system fails. That's why having a reserve fund is essential. Capital expenditures are the long-term, big-ticket items every home eventually needs. These aren't emergency repairs. They're predictable lifestyle cycle replacements. So here are the typical replacement timelines. Your roof, 20 to 30 years. HVAC, 12 to 15 years. Water heater, 8 to 12 years. Appliances, 7 to 10 years. Flooring, 10 to 15 years. Exterior paint, 5 to 10 years. If you're buying an older home, you should assume more of these are coming sooner rather than later. Your inspector will give you clues, but they can't predict exact timelines. A smart homeowner sets aside a reserve, even if it's only $50 to $150 a month, to soften those big expenses when they arrive. Let's talk about the things that most often catch new buyers off guard. Tree removal. Huge trees can cost thousands, sometimes $10,000. Sewer line backups. You don't want this surprise. Crawl space issues. Moisture, drainage, and insulation. Basement water. Very common in the Midwest. Old appliances dying at the same time. It happens more than you think. How to prevent the stress? Keep a small emergency home fund. Know the age of major systems before buying. Plan your budget based upon the full cost of home ownership, not the bare minimum. When you expect these expenses, they stop being surprises and become something that you're prepared for. Let's walk through an example using a $250,000 home. Your mortgage payment, principal and interest, is going to be about $1,200. Taxes are going to be about $250. Insurance, $100. HOA, $50. Utilities on average, about $350. Maintenance and repairs, using the 1% rule, $200. Internet and extras, $100. So the total true monthly costs $2,250. Your lender might tell you you're pre-approved for the mortgage payments alone, but you need to approve yourself based upon the total costs. This process helps ensure you choose a home you'll love without the financial stress. Now you understand the true cost of home ownership and why it's so important to plan ahead. When you budget realistically, you protect your finances, reduce stress, and make decisions that support your long-term goals.